All right, let's talk of entry model. I'm recording already. So this is a model you want to look out for when price gets to your point of interest. When price gets to your higher time frame point of interest, this is the model you want to look out for. Now, your higher time frame point of interest can be either a fair value gap or can be an order block. Or let me use this for instance. Remember I said that if we are bullish, you want to wait for price at the lows, the higher lows. Like now, we are bullish here. You want to wait for price here. This is a point of interest. And price didn't come here. Price came into fair value gap and ran away. Late price ran away. Price created this point of interest as order block. So as price came here, is the entry model you have to look out for. The entry model. When price gets to your point of interest, let's say we have this. This is zone because you can see clearly that we are bearish. Price has been bearish. This is what you have here. Price took out this previous high and created this zone for you. And price ran away. So when price broke this low, price will need to come and mitigate it someday. So that's a break of the lows. So by structure, we are bearish. Okay? And then you see price coming back. I'm not after all of this move. What I'm after now is when price is coming back, this is what you want to see at this zone. This is your point of interest. Now, this is your higher time frame zone you are looking to sell. So you are not going to jump into the market around this zone. You are not also going to sell around this zone. No. Because you know price will take it away because this is just an inducement. The real move started from here. Okay? So let me take this on a bit higher. Just like a market scenario. Okay. So when price is coming here, this is your higher time frame point of interest or a zone where you want to sell. So if price comes here, is the entry model now we're talking about. So that's entry models that I want to show you now. Look at this. Price ran up. Look at this expansion. Created this high. Created this zone. So this was a valid zone. Because this zone took out all of this week and ran up. So immediately price broke here. You're waiting at this zone. You're waiting that if price should come back, this is the zone now. Okay, if price comes back here, I want to sell lower. So when price came, tapped in, ran away, price created all of this zone. Price came back to it. Now that price comes here is the model you now want to look out for. You see price still came back to that zone and still push lower. So what I'm saying is that when price come here, this is the model you want to look out for. Price is still bullish. So most times price will give you this, a touch, come, blast it, and blast away. So when you see a blast like this, you can even blast like this. Come back, come here, and run off. So this is the entry model. The same thing that happened here will happen at the entry model. If you watch, you see that price will take previous highs, price will take it out, and price will run and come and close below. So once price breaks structure to the downside, price will present a fair value gap here for you to get in. So this is the entry model. Now, why is it like this? Price is bearish. First thing you want to know, the overall structure or the overall trend is bearish. And since you have been able to spot the overall structure, the next thing you want to pay attention to is where is price coming to, which is this zone. So now that you have the idea, price start buying from here. So for me, if I see a buy around this zone, I can buy. Okay? But the buy I'm going to buy around this zone, I know that it's a counter trend. It's not the main trend. That's not the main trend. Okay? So price gives this kind of schematics here. You get in here, you can buy, take profit here, or you come out, you are targeting this zone because you know there's an inducement here. So if I buy from here, I can take profit here. Imagine I buy from here. I can take profit here. Stop loss at this low. Yeah, because I know what I'm doing. I can buy this and take profit at this zone. I know price will get there. But I also know it's a counter trend, so I'm not going to hold the trade until this zone. I just want to take profit from here. Now that price comes here, I get my profit in here. Price comes, give you this same model. This is the entry model I'm talking about. I'll take you to the chart. We're going to look at one or two. I've been looking at them all this while, but I want you to focus on the model. This is what you want to look at for any time on the chart. Once price comes to either the higher high or the higher low. If it comes to the higher high, if we are bearish, you look for that model to sell. If it comes to the higher low, on a bullish scenario, you look for how to buy. Do you get what I just explained? So write this down. Go ahead. Write this down.
Okay.
When price is bullish, look for entry model at the higher low, which is the most recent low, which is the most recent low. Price is bullish, look for the most, okay, put like this. Okay, I think it's fine like this. Can you see it, or is it too small? Okay, so when price
is bullish, look for entry model at the higher low, which is the most recent low.
Good. So now look at this. Let's say this retracement. This is retracement. This is expansion. Expansion is in line of the trend. So this is retracement, for instance. No, let me put it like this. This is expansion to the downside. This is expansion. In the line of the trend is expansion. Why, when price is going like this, opposite the trend, is called retracement. That's retracement.
Retracement is when
price is going opposite the trend. While expansion is when price is going in line with the trend. That's expansion for you. So as price is going lower is expansion. As price start climbing is retracement, because this, what you're seeing now, we are in a bearish scenario. Price is bearish, okay? Since price is bearish, we want to see price retrace to this higher time frame zone. So at this higher time frame zone, that's where you look for your entry model. Okay. Let me put this one here. Now, if price is bearish, price is bearish, look for entry model at the higher highs. All higher lows. Or let me put lower high rather. Okay. Look for entry at the lower highs, which is the most recent high. Okay, I think that's all right. So like this is the lower high, lower low, lower high, lower low. So you are looking for entry at the lower high, because this was your previous lower high. This is the most recent lower low. Are you getting it now? The price is bearish. Did you write that?
Let me echo your auto.
Okay. Okay, so are you done?
Go ahead.
Okay. So like this now, this is VIX 25. Okay. When price was bullish, you wanted to see.
Bros,
Yes. Yes.
just a minute. This the bearish this thing is just as same as opposite of the bullish now.
Of course.
For entry model.
Yes, this is the same model, just up. That's why I inverted the chart. So you see that it's the same thing. It's the same thing. If you invert the chart, you see it's the same thing. So for bullish, you want to wait at the lows and buy once there's a break of structure, you buy from here.
Okay, let's go ahead.
So for instance,
when price is bullish, you look for we'll get one man on there.
Go ahead.
No man who that diagram I want to know from the language.
Is there
when
now?
The price is bullish, look for okay, we're gonna use silver. No problem.
Yes, entry model at the higher low, which is the most recent low. And when price is bearish, look for entry model at the lower high, which is the most recent high.
All right, no problem.
So I was trying to give an example with this. Now we have this chart. Price took out these lows, tapped into this fair value gap. Look at it. All this fair value gap, that's where price tapped into. And price broke. So when price broke, price came back here. That's when you want to start looking for entry model. So let me presume that we can get a 1 hour model here. Let's see if it's possible to get a 1 hour chart around any of these zones. Okay, we look at the first zone, then we look at the second zone. So this is the first zone. This is the main point. This is the first zone. Okay. When price took this high, this zone was not the main zone. So if you zoom out, you're going to discover that there was a fair value gap here. Is that correct? Price broke, left this fair value gap. So all these ones were just liquidities.
Okay.
Trend line liquidities. Okay.
All those, all those equal ranging.
Yes.
Okay.
Yes. We call them trend line liquidities. Liquidity. Yeah, that's what they are. So price, look at the fair value gap, price came in there. And when price came in there, that's when you will start looking for entry model. All right. So price is there. Now that price is there, the entry model is that you want to see a break and price taps in. So let's zoom here out. Let's see whether there was such an entry model. This was a low. So follow me now. This was a low. Can you see the low?
Where is your cursor?
This is the low.
Yeah, that is a low.
Good. Then This is the high. That's the high. That's in the high bar. Beautiful. After that, this is a low.
The low.
And what do you see? Price broke here.
But this candle need black in here. Those are the bullish candles, Abi.
No, that's my sell candle. Bullish candle is going up.
Okay.
So this was a high. This was another low. And after that low was created.
This low came up. I won't get the low now.
Then this high was created.
This high. The previous low created this high Nuyana. Then I give another recent low.
Yes. Then after that, you can see that break of structure there. You can see the break of structure to the offside. Is that correct?
I'm seeing it.
So when price broke structure, what can you see here? There was a clean fair value gap. You see price came back there? So price ran away, even broke this high. Price closed above this high. So when price ran away, just wait for price at the fair value gap. So you have had entry here at the open of this fair value gap. Stop loss at this low. That was how many pips? About 25 pips. That's fine. Then you start targeting. Your target is here, this high. This is your target. That's your target TP. So you see that price got there.
I even pass yourself.
Yes. So that's how you'd have caught that entry. Beautiful. Price left. Price started trading up. You can see the structure. High, low. You see another high. When price created this high, you'd have been able to enter on this liquidity. Entry was there. Price created another high. Yes. Price created another high. Price created this high. Created this high.
Yes, or more.
Yes, the mouse is. I think the mouse is lagging. I think the mouse is lagging. It's not flowing. It's not following. The mouse is lagging. I'm not enjoying it. Let's see. I think it's better. So price created this high. Created this high. And price started selling. But I know we are still bullish until price breaks a daily, give a daily break of structure. I will not take it serious. Now price came back to that same zone. So this is the second time price is coming there. Let's now find out if there was a second entry. Okay, so this was the zone when price came back. Look at beautifully. Look at this high. Created this low. Created this high. Are you seeing my mouse?
Very clear.
Created this low. Ran away. So this was already a break. Is that correct? So you were to wait here. Then you get your entry there on that fair value gap. You can see that clean fair value gap there. So if you had played this, and it didn't give, let's assume you play here, entry, and stop loss at the low. Look at what happened. Price wick you out and ran away. And that's why if stop loss is here, like what I teach in the mentorship team, I told them to add some pips. Add some. Because sometimes price can come. Remember, here is liquidity. People are buying from here. So sometimes price will come and clear the people buying, just the way it did now. You see how they would have taken you out?
Yeah.
And run away. Yes. And this is very painful, like very painful. Imagine you want to target here. This is where you want to catch price too.
And yet price went up to that.
This is up to a 1 to 14. And price kick you out and go your way. And it is very painful. So what I tell them is add some pips. So if price is something like this is the stop loss, just add some pips down. So if you had added some pips, let's say you were not taken out, for instance, maybe this 15 pips, which is still very small. I used to add like 3-4 pips, okay, from where this is. This was 12 pips, 11 pips. So if you add 3 and 4, are you not seeing this stop? Look at stop under it.
It's not that clear, sure. But you made the
zoom it out. Hold your phone and zoom it out. Are you watching from laptop?
Yeah, I'm watching from laptop.
Okay. I thought it was phone. If you bring out just bring out this tool.
Okay, no, 15 point something. I've started.
Beautiful. So that 15 pips, originally it was 11. So if you add 4 pips, that's around 15. So you'll not have been taken out from this trade, you'll be on the trade.
Okay, 15.3 something.
Yes, and price ran to give you all of this. But that entry model was there. That's what gave you see the fair value gap. That's what gives this confirmation on both trades. Whether this trade or this trade. If that entry model is not there, we don't take it because, not that it will still not move, but how are you sure? So it's the entry model that tells you that price is definitely going to continue in that direction. So let's go to daily. So that was how these entries were here. Now, price is currently here.
Okay.
I told my people that I want price to come here. At least price should come here. Okay. I want price to do something like this and fall. Why am I predicting that? Look at this fair value gap is here. See that fair value gap? What did price do? Price tapped into it.
Yes. I kept raging.
You call it raging, but let's see it on the lower time frame. So that becomes the tap into it. This becomes the low. So recent high, recent low. Most recent low. Then this is my most recent high. Most recent high. So now let's go to 1 hour. The time frame for 24 hours for daily is 1 hour. So let's see what is happening on 1 hour here. So this is 1 hour. So this is 1 hour. So permit me to remove this. Now on 1 hour, what am I looking for? Price should give me that entry model, which is my break of structure. And what can you find? Look at where price was going. Price created all of this side. Look at how this price ran down and broke here. So what will you call this?
Break of structure.
Good. So price has broken structure to the downside. When price breaks structure, we start looking for what to anything interesting, either an order block or a fair value gap. Okay.
What is an order block?
An order block is the last candle that captured liquidity and led to a break of structure. Like this.
Example of it here.
This is it. I know, see when candle, look at price board, look at this last candle here. This last candle took out this week and ran up and took out the high. So this candle took out the low and took out the high. That's another block. See, it took out the low, which is liquidity, and led to taking of the high, which is your break of structure. So anytime price is coming back, price must come there to play. Did you see that buy? That buy came into that other block and started buying. So this was the buy. So that's another block. Takes out liquidity, led to a break of structure. Anytime price come, price will come there. So
and the techniques. What do you do with that?
December, so you waited for price here, price came here, give an entry here, simple. You have taken 1 to 3. Now that price has broken structure, I'm looking for either a fair value gap or that last candle. So now there's no fair value gap here, so I look at the last move. This is the last move. This is the move here.
Now it kept coming down.
Before that's, let's check it on 4 hours to see it now. So you see this last candle, that's the other block. Because this last candle took out
white last candle.
Yes, this white candle. It took out this and then led to the break of this. That's why price came back into it.
Wait, please, a minute. This last candle took out the previous candle that's behind it.
Yes, it took out this white candle.
Yes. Then
price ran down.
And price came down.
And broke this structure.
Yes.
So that's the other block.
Okay. Which one? This white candle and other block.
Yes, this last candle. Other block is the last candle. Don't forget it. The last candle that took liquidity and led to a break of structure, like this candle. Took the previous lows and broke the high. And other block is that last candle that took liquidity and led to a break of structure. So now the price comes back to the other block. You want to see how to sell. So that's where we are selling this. I want to sell it down.
Areta, give me space. I don't need you. You're able to go and play. Your noise is disturbing me.
So we have 2202.6.
Yeah, 220.66.
2.6, yes. That's
your entry.
That's the entry, yeah. They can just give some space for stop loss.
More there. Yeah, this is check out this. Just wait. More. I'm on line with somebody. No problem.
So that's just it. So on 4 hours.
If hello, can I go ahead and talk?
Go ahead.
Now, if I came if I want to execute this market now, I haven't started checking it from maybe the most highest time frame, which was 24 hours, 4 hours. And I would then, if I want to execute, it's best I execute in 30 minutes,
30 minutes or 1 hour is fine. 30 minutes or
But meanwhile, I have gotten everything in that 4 hours.
Yes. You have already gotten your structure, your bias where you are going to. You can now execute on the lower time frame.
But what you are, hello, please.
I can hear you.
This thing is on 15 minutes now. We're about to leave
Yeah.
there, babe. Now, but if you come back to, let's say, like 4 hours where we started the time frame for the market, is it not the same? This 220 that
It's the
it will
same
still
thing.
be?
It's the same thing.
Because it ain't gonna notice up.
It's the same. It's not changing, I'm only looking
Uh-huh.
at the lower time frame to see the extra confirmation. See, price still ran up and broke this low.
Okay.
So this
Now
is what I'm
this thing,
looking at.
or your MT5, right?
Yeah, sure. No.
Now, what I execute on man here? This is on you go to sell limit.
Yeah, you put
And
sell limit 2202.6. Stop loss at the high. If you just add some pips, 2208, and then you start looking to take profit from the extreme
now
low.
wait, this thing now, how would I know that it's in 15 minutes?
How do you mean? How would you know that the trade is on 15 minutes or?
Let me we're going to executor on phone.
You don't need to know the 15 minutes. You look at it on system, on laptop,
Okay.
analyze it here. Is this figures that will just take you to the phone? The figures is what you just impute. It really doesn't matter whether it's 15 minutes or
Okay.
1 hour. It's the figures.
Okay.
Yeah. So necessarily, you want to execute this, you can just do it on 1 hour.
Okay.
But if I did it now, okay, I think I should explain this to you. If I executed it on 4 hours, my entry will be here. This will be my entry on 4 hours. Here.
Why?
This is my entry on 4 hours.
Just a minute, away. Hey, who is beating that boy? Who is crying?
If you are true, unmute and talk. Okay.
Yeah.
You said why? Okay, let me
Yes.
tell you why now. Let me put it like this. Most recent high.
Mm.
Let me move all of this so that you not be confused. Yes. Okay. While I said it will not be on 2202, look at 4 hours. Here is the order block. This is the order block on 4 hours. This last candle. So if I'm to execute on 4 hours, this tap here. When price tap here, that would have been my entry. So let me remove this. This would have been my entry. This tap here. When price came back to it, that would have been my entry. And if my entry is here, my stop loss will be here. My stop loss will be here. My entry would have been 2202.5. No, 2205.4. That would have been my entry here. Are you getting it now? It will be different from this entry. It will be different from if price is here. It will be different. It can't be
Okay.
the same. Yes, it can't be the same. Lower time frame entry and higher time frame is not the same.
Okay.
So, but I want price. If you catch this one from here, you want to take profit at this low. So this is what I would have had on 4 hours. Something like this. Stop loss at this high. Take profit at this low. That would have the one you have on 4 hours. What's the risk to ratio reward here? Is 4. You get 1 ratio 4.
4.5.
1 ratio 4.13.
Mm.
But let's delete this. Let's go to that 5 minutes. Let's see. The risk to ratio reward is the major, is the gain. So look at this. You execute here. So this low. So that's the low.
Mm.
This is a 1 to 13. Can you see that it's a 1 to 13?
Yeah.
That's a 1 to
That's
13.
13.4.
So yes, a 1 to 13.4. So it's completely different. You get a higher risk to ratio reward when you execute on lower time frame. That's the
Okay.
advantage.
Okay.
You get more.
Mm. So if, for example, you are putting like $10 there, it will be
By
13 point
13.4.
something times 13.4 times 10.
Yes.
And now, for example,
Yeah.
assuming on manner you want to execute this thing now, you are through, you want to execute it. Now, how do you know amount no error? Is it
It's
just what you just put the DC like this, it has automatically take the
no.
ratio?
If you impute the figures,
Mm-hmm.
impute the figures here on the buy limit or sell limit with the stop loss and take profit, it will tell you, MT5 will tell you how much you have risk. MT5 will show you. There are manual ways of calculating your risk and stop loss, but MT5 has made it simple. If you impute these figures here on the
Mm.
MT5, you will see how much you are risking.
You know he show, you know that show.
It will show it on your phone now. It will show it on the chart. It will show it.
Ah.
Yes, it will. It will show it on the chart. So that's what we mean by entry model. We've seen that for, I think we've seen that for a buy. Maybe we'll look for that for a sell. This one is an entry model. You can see the same entry model here. That's the entry model. See now, price ran and took out all of these highs. See all of these highs we are taking liquidity sweep. And price has given us a break here. So if price come back here, we sell from here. First take profit here, second take profit here, then third take profit here. All the lows becomes your profit point. So you can take maybe 50% here, price come here, you take another 30%, price come here, you take 100%.
So which means once you get to this place, those percentage you are right saying now, you would have stopped the trade.
No, you not stop the trade, you close some parts. That's what I'm talking about.
Anyway, when we get there, I don't know how they do the close.
Hey, don't worry, we'll get there. Let's understand the structure first. So let's go to 75. I want to show you something. Any chart is the same thing, whether it's currency or this thing. So let's check 75. Let me show you. Let's look for another entry, the same entry model on another asset. So this is daily. Clearly, we see that price has been bearish. Is that correct? Price is selling down. You see, it's selling down. Price keeps going down, 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 down. That's why this fair value gap didn't hold. Because price kept going low, going low, going low. So now look at all of this accumulation here. All of this accumulation. This is so interesting. A high, a low, a high, a low, a high, a low. What can you find? Price broke structure. Is that correct? Beautiful. Price gave a break. So I'll call this my sweep. It's not this one. Yeah, something like that. So this is what I'm expecting. I'm expecting price here.
Bros.
Yes.
The sweep, once there is a sweep, I don't know if I'm correct, and there is a break of structure, there must be, there's always a fair value gap close to it.
Yeah. There's a fair value gap here, but you can't see it on this time frame. If there was weekly, you'd have seen it on weekly. There's a fair value gap here. But we know that, okay, all right, look at 8 hours now. Can you see fair value gap there? Fair value gap is there, but you have to look for it. Are you seeing fair value gap there? Are you sure you can see it?
I can see it very well.
So that's the fair value gap. There was it on daily? No, it was not on daily, but it doesn't mean it's still not. There's a fair value gap somewhere. You have to look for it. You have to look for it. So it's there.
Fair value gap is always the last is always closer to the last candle, to the last candle of the block, or to the last block, Abi?
Yes, you're right. So price should come here and start pushing higher. So most of the times, fair value gap will just be above the last candle, because that last candle is the order block. That's the order block. So if I put it on daily now, you may not see it. But me that I put it here, I've seen it. I'd be wondering, why did he put it here? Why should price come this low? Yes, because the order block is there, the fair value gap is there. So when price come here, I want to see that liquidity sweep and a break to start buying, because I really want to buy up. And if we catch this buy, we're going to buy it to this zone, possibly to this zone. It's going to be for months. You can even buy this one till December.
And you can remain like that?
Yes, to keep buying it for months.
And you leave it like that, you believe that what?
Not that I believe it will get there. I don't need to believe. Why shouldn't it?
Now, this trading work here, this particular tool, you just trade it. It will not be on an instant execution now. This is a buy limit.
It's a buy limit, but you cannot set buy limit on daily. You have to allow price to come there and give you another break of structure on 1 hour. Don't confuse it. If you have a daily zone like this, allow price to come there and give you a 1 hour break of structure.
You must go to 1 hour and check it.
Yes, when price come there. When price come there.
System, you know?
Yeah, sure. What happened?
No, I mean, no, we screenshot that.
75. So let me send this to the signal group. Keep eyes. For those that can keep eyes, they keep eyes and they make money. For those that can't keep eyes, they can keep waiting for me. Where's it? So let's see now. Let's see what I can get when price came here. When price came here, because we are bearish. So price came here and sold down to take profit here. Most recent high, most recent low. So this was the last high. Okay. So let me write
Hello? Network. Hello? Mugwe. Your network all gets a Mugwe. Hello? Hello?
Okay. Sorry, I had a call, so it dropped. Let me log in again. Okay, so let's see this place. I want to see this zone. Let's see what happened at this zone. Okay. So let's go to 1 hour. Let's see what happened at this zone. If there was a break and a retest for an entry at that zone, let's see. So this is the zone when price came in there. That was the zone. So let's zoom it out. Let's see whether I'll get the entry model there. Look at all of this. First, what price did was to clear all these highs. So price took out all of these highs. And price ran away by breaking here. Breaking this zone. So when price broke this zone, okay, we know that price will have to come back. When price will come is what I don't know. And if price didn't come, no problem. But that was the whole move. This is the whole push. That was the push. Boom. That even took out this high and ran away. So we expect that the price should come here. Necessarily, I'm choosing my language. Price was supposed to break here and come back to this fair value gap here. Necessarily. Can you see that fair value gap there? But you see, you can't tell price what to do and when to do it. So sometimes price can decide to just go. So price ran away, price didn't come. but that place is still vacant. Price ran, and look at the lows. We were thinking price will come to take. Price didn't take it. Price gave up all this push, and price came back up. So this zone was still here. Price didn't come for it. Now there are other things you need to add. When price was now returning, this was inducement. Price captured it. Remember, the most recent high is still there. Most recent low is still there. Now that price has captured inducement, you want to look for that entry model. If price give that model here, it's fine. Price didn't get to this zone, but if once price give that entry model here, it's fine, because if you bring out your Fibonacci from this high to this low, you see that price already at a premium zone above 50%. So price can give that entry if price didn't want to come here.
Fibonacci.
Yes, bring out your Fibonacci tool, and then from there you see what to do. Price
from
inducement
from the most recent high.
Yes, from the most, if you take it from the most recent high to the most recent low, this is already 50% and above. Look at it. From this high to the most recent low, this price came already to 50% and gave a break of structure. Now that price has given break of structure, play this next most recent high, most recent low. This high to this low. Because price has broken structure, you want a retest. So this and this is what you now concentrate on. You see, this entry came back. This entry here came above 50% also. So let's zoom it out again and see if there was an entry at that zone. This was the zone. You still want to look for the same entry. This was inducement. Price created high, low, high. And you can see clearly how that price ran away and did what? Gave a break of structure. So when price broke structure, this last candle was now valid. That's why price came back here. And this last candle, if you go to another time frame, you will find out that there's a fair value gap on this candle. So I want us to check 30 minutes. Let's see. There's a fair value gap somewhere. That's why price came there. Let's see. Okay, this is the zone. You have to just look for these things. You have to. Okay, that's the zone. Can you see there was fair value gap there? That was the fair value gap. So price broke structure. You have your entry on the fair value gap there. Either open or 50% of the fair value gap, anyone. Stop loss should not be on this high. On this high, I had like few pips to the stop loss, and then my target is still this overall low. So from here, take it to this low. So that price came in. So that was the entry that price presented. That was the entry that price presented. Is it clear?
Yeah, I'm seeing it.
So you can see the most recent high. You can see the most recent low. You can see how the price came here, took out these previous highs and ran away and break this zone. Clear break of structure. You had a fair value gap above. Price didn't come there. Price took inducement and gave that same entry model here. See, price broke, ran down, ran up, boom, entry, and price hit stop loss. Sorry, hit your take profit. Price came back again, gave that entry, boom, price came and target here. So right now, let price clear all of these lows, take out these guys here. And then once price take out these guys, we start looking to get buys. Once we catch buy here, first TP will be this high.
Once
What is not doing?
once he hit this buy zone,
If
this
this buy
buy
zone,
zone, yeah, that
you
are
wait
waiting.
for
Once
a
he
1 hour BMS.
because
For a 1 hour
okay,
entry model to be formed.
hello.
I can hear you.
Okay, what I'm saying, because this thing now we are on 1 hour, right? We are on 1 hour. Now we wait on that say 1 hour time frame zone for it to touch this zone, this entry zone here.
Yeah,
Then
this
you
is what
now
I'm
take
saying.
your
Touch it and give you this model. That's what I'm saying. You have not gotten it. If you did not see this model, decide to go lower. That's what I'm saying.
okay. You must present this model. There must be a fair value gap and a break of structure.
Structure before a fair value gap.
Okay.
There must be a break of structure. Price will have to break this high, then leave a fair value gap here. Don't rush it. Then that becomes your entry. Price can even give you something like this. Price can give you something like this.
Up where this children voice, this also.
I can hear them now, but it's really not disturbing me. It's not disturbing.
Let me tell them to dress. Oh yeah, Abra, for a shout, don't disturb me. I love that dog. Come, Abra, love this dog so that I'm not be there.
So just look out for something like this. Price gives you a BMS, and then price rally away. Okay? So this is the model that I'm explaining. You have to see that model. You have to see it before you jump in. Is it clear? All right, I'll stop the recording so that I ask question. 5 vertical 1 hour.